Are you thinking about leaving the UK? And if so, do you want to be tax efficient whilst doing that? Well, if so, you want to check out this video. Hi everyone, my name is indeed Simon Mishevich and I'm talking to you today about tax residency status. More importantly, how you become tax efficient whilst leaving the UK. So I want to focus on this particular page to start with, which, interestingly enough, it's tax on foreign income, as though we're going to be focusing on foreign income in the UK. Well, that's not actually the case. What I want to draw your attention to is the purple highlight. I'm just going to make this a bit bigger. It says here, you're automatically non-resident if either you spend fewer than 16 days in the UK or 46 days if you have not been classed as UK resident in the last 3 tax years, or you work abroad full-time, at least 35 hours per week, spent fewer than 91 days in the UK, of which no more than 30 days were spent working. Now, I want to focus on a couple of things here. First of all, the calendar year is not applicable. Okay? For tax purposes, you have to look at it from the 6th of April to the following 5th of April. So there's your danger point number 1. If you think it's calendar year, like it is in Spain, like it is in America, like it is in Hong Kong, all those countries, then you'll be mistaken, because we run from the 6th of April to the 5th of April in the United Kingdom. Okay. And what this is saying is if you spent less than 16 days in the UK in that calendar year, so looking really, you always got to look back and say, well, from the tax year looking backwards, have I spent less than 16 days in the UK? Or, more importantly, 46 days if you've not been tax resident in the UK in the preceding 3 years, then you'll automatically be non-resident. Okay, so that's the first thing. Now, you might be thinking, well, if I leave, let's say in, start from 6th of April, but I don't leave the UK till August, well, that doesn't make me tax resident, but it may not also mean that I'm resident. Or it may actually mean I am resident. So what do I do about my UK income if I'm leaving the UK mid-year? And I'm going to talk to you about that in terms of split years. Okay, so there's a lot of detail, so do bear with me, and I will purposely go as slow as possible, but you have the choice and the power to pause and rewind, so feel free to do that. Now, on this point though, if you're working full-time anywhere in a different country, then you're automatically going to be considered non-UK resident if you are indeed set up shop in another country. And as it says here, you average more than 35 hours per week and spend less than 91 days in the UK, 30 days less working. All right, so if that's the case, you might be considered, well, I'm still confused, not sure where I am. And that's absolutely fine, because what this video is going to do is just kind of demystify it. The problem is with the UK tax residency status, when you're leaving the UK, it's not as easy as saying, well, I spent less than 183 days, therefore I'm not resident. Well, that's not true, and this is the problem. You have this split year treatment going on. So let's get into understanding. If you've been in the UK less than 16 days, looking back in the tax year, again, you've always got to look back from the 6th of April to the following 5th of April. But in that looking back year, if you've been in the UK less than 16 days, you're not tax resident. So happy days. If you have been resident, then those number of days increases from 16 days to 46 days, provided that you have been non-tax resident in the last 3 years. Okay, so that's really important to note. Now, what I want to do is talk about the cases, because there's several cases whereby you have this split year treatment. What does split year really mean? Well, split year treatment means that we need to identify the point in turn when you are no longer resident in the UK, and therefore that side of income that you earn from anywhere else in the world is not going to be subject to UK tax, and that's what we're just trying to focus on. So there are several ways in which you can demonstrate to HMRC that you are no longer resident in the UK, and therefore your worldwide income does not need to be attracting this UK tax. And as it says here, there are 8 sets of circumstances. I'll just make this larger. There are 8 sets of circumstances when an individual might meet the criteria for a split year treatment for a particular year. Well, don't worry, there aren't going to be 8 cases that we'll focus on, because we just want to focus on the ones that are you leaving the UK. And that's really most important. So we're going to focus on that first. And as the previous page suggested, that you could be working full time. So if you're employed and you're moving to a different country, well, luckily enough, it says here, to qualify for this split year treatment, as in the money you earn in another country not to be subject to UK tax, you need to fulfill these criteria that I've highlighted. The first one being you were UK resident for the year in question. So you need to be in the year. So was you a resident at some point in that year? Well, yes, you was, because you're looking for that split year. You're looking to disconnect. So I've been resident from the 6th of April to the end of July, but I start my job, let's say, in August. Okay, so I was resident in the year question because of that what I've just said. Be UK resident for the previous tax year, whether or not this is a split year. Again, we are focusing on the fact that you are going to be leaving this the UK to be considered the non-tax resident for the second part of the year. And it does say satisfy overseas work criteria. And as the previous page suggested, that if you are going to be working at least 35 hours per week, then you will be okay to be considered working abroad. And therefore you meet the full-time work. That does mean that the income you earn from employment from that time of moving to that country, you will not be subject to UK tax, thankfully. Now, if you're American listening to this, by the way, well, then you have a different ball game. I'm just focusing on the UK tax because, of course, the IRS does like to tax you irrespective of where you are. But there are some other reductions that you can get from the foreign earned employment income that you have. So you might want to talk about that with your CPA. Okay, so then we've got the partner of someone starting to work full-time overseas. So maybe that you're going over to a different country but not working for a number of reasons. But your spouse is. Now, spouse could be husband, wife, civil partner. Okay, and what we're talking about here is that you need to be to fulfill this criteria of not having their income or your income in those foreign countries being subject to UK tax. You need to be UK resident for the tax year being considered for the split year treatment. Again, looking back, well, I was resident from the 6th of April to the 31st of July, but the 1st of August, my partner now starts work and I'm moving country with them. Okay. Be UK resident for the previous tax year, which of course we would be. Be a UK non-resident for the tax year following the tax year being considered. Well, if you're going to a different country, no doubt you'll be meeting their tax residency status over in that country anyway. So you've got proof that you are a resident somewhere else, not in the UK. So that's okay. Have a partner whose circumstances falls within case 1 for the tax year or the previous year. We've just met those conditions. We've just said that. Have been living together in the UK either at some point in the tax year or in the previous tax year. So it's not a fad just to say, well, I'm actually abroad with them, but we didn't really live together. That's not the case. You have to be living together, husband, wife, civil partner, and you are moving to the country with them, which it basically says the next point. Move overseas so that you can live together while their partner is working overseas. Clearly, you are going over there to be with them. The last point, which I think is worth highlighting, is have no UK home. Well, that's really important because what you want to do is sever the number of ties that you have in the UK to prove to HMRC that you are not tax resident. So there's no point you working abroad, let's say in Spain, coming over the Eurotunnel, coming back. Actually, you can't do that you need to sever ties with the UK in order for your income not to be subject to UK tax. It also goes on to say, or if they do have homes in the UK and overseas, that you spend a greater proportion in that country. Now, how would anyone know? Well, border controls for a start, they will put that detail in there. So you need to be very, very careful in terms of the tax residency status and having properties wherever. So always bearing that in mind. So we've covered off now kind of a work purpose for you or your spouse, but there are other things to consider as well. And the third thing we're going to focus on, split year treatment. Again, we're thinking about this. I've been in the UK from the 6th of April to the 31st of July. I know I'm resident. I know my income up to that point in time will be subject to UK tax, but I'm leaving on the 1st of August. So I'm going to just continue that theme. Ceasing to have a home in the UK. Okay, so we sell our home in the UK. We buy a home in another country. Does that help me become a non-tax resident? And again, they must be UK resident in the year. Again, 6th of April to the 31st of July, resident. I'm okay. Previous year, I was tax resident. Yes, tick that box. Be non-UK resident for the tax year following the split year. And again, spending fewer nights in the UK, 16 nights if I'm taxed in the UK, or if I'm going to be 46 nights in the previous 3 tax years. We must also consider that. We've also got the point of being non-UK resident for the year following the tax year. So we're looking forwards now and saying we are not going to be UK tax resident. I might be moving to Spain. And therefore, my home is there, my work or my business activities there. I'm not going to be UK resident for tax purposes. Have one or more homes in the UK at the start of the tax year, and at some point of the year, cease to have any home in the UK for the rest of the tax year. So I've disposed of my home whilst in that tax year, whilst I'm moving abroad. And of course, you need to spend fewer than 16 days in the UK. That's really important. But again, there is this notion of 46 days if you've been tax resident in the not been tax resident, sorry, in the previous 3 tax years. So always think about that as well. Moving on, we've got this other residency, domicile and remittance basis manual, which basically says, I'm going to look at your split year. So there are 8 cases to meet. Well, basically, we've covered off just work and home, and that's all you need to think about. Then this covers off your business as well. So I'll just leave it on there so you can have a look at this in your own time. But where are the tax advantages? Well, the tax advantages might be that if you're a business owner, a limited company business owner, and you take dividends out of that company, you might want to say, well, actually, do you know what? I'm going to leave the UK on the 31st of July and go to another country 1st of August. Now, you have to think about residency tax status there as well. But if we think about America as an example, then you are not tax resident in America until you've been there for 183 days. Now, there are some complexities of looking at back as well to the previous 2 tax years, and they'll add those up. But if you're going to America for the first time, then, and you've not been in America for the last 2 years before that, then it's 183 days. Now, you have to look at other countries, clearly. But what you want to do is think about, well, could I take money from my UK company as dividends after the point I leave and not have that dividend income taxed from UK tax perspective and not have it taxed in the country I'm leaving? Because there is that little sweet spot whereby you are not tax resident in the UK because of the split year treatment. You're not tax resident in the country you're going to simply because you are less than 183 days, adding up other factors here. And therefore, where would you be taxed? Well, the answer would be potentially nowhere. So you could take out a lump sum of cash out of your limited company, and that would not be subject to income tax in the UK or the country you're moving to. So it's a great opportunity in order for you to become very tax efficient whilst leaving the UK. Now, I appreciate that is a lot of detail, and some of it may be difficult to understand, but it also may be a lot of detail behind all of this as well. So I would certainly recommend that you take a tax consultation with us to talk about this thing further. But there will be also a video that I think you'd be worth watching in this suite of videos of being tax resident in the UK or other countries as well. Until that video though, my name is Simon Mashevich from Optimize Accountants, and I'll see you again soon. Cheerio.